The Federal Reserve disappoints, offering no big bazooka of its own to keep the U.S. economy going. And the U.S. dollar index trumps the $80 level while stocks try to hold up and commodities head lower. I'm Alix, and the morning call starts right now.
Good morning, I'm Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Alix with The Street, and together we bring you Morning Call Express. Scott, the S&P got hit on Tuesday along with everything else as the Federal Reserve disappoints, doesn't deliver its own big bazooka of another quantitative easing. What key level did the markets actually hold?
Yesterday the market held the 50-day, but typically it holds it the first time. Yesterday when the Fed came out with their release, I think some people were still thinking we might get a surprise quarter rate cut. And there was even some talk that they might even raise a quarter to show
the discount rate. The rate's already at zero. It would be the discount rate what banks can actually borrow from the Fed.
Exactly.
Yeah.
They thought that they would indicate something, but they said nothing. So with that being the last meeting of the year, there was some disappointment. But the market started to actually act weak beforehand. It was up about 80, 90 points, and I wrote a whole list of why I think this can hold up and that it feels heavy. Then lo and behold, after the release, the market went from up 100 to almost down 60 and held the 50-day by a thread, and usually it does the first time, but the second or third time, it might not be so successful.
All right, so with futures kind of iffy today, I would say, what's your strategy?
I'll use yesterday's low as a pivot. If you look here at the chart of the S&P, you'll see exactly what I'm talking about. Yesterday, the market tried to be strong and it reversed, made a little bit of a lower high versus this key resistance, that 200-day, which I think now feels like miles away. And we're opening right near yesterday's low of about 122.45. So if you're trading long still for momentum, you got to get out of the way if it breaks this 122.45, because typically when you trade into a gap, you fill the majority of it, and the next level underneath could be that 121, which I think the 50% retracement, which I'll put in here because we've been using these lately, is around 121.20, and that's right here, 121.80, and then that 0.618 is right around 120.47. So below this area, you still have two lower levels that could contain this downside move for macro investors, but for momentum traders, I think people might be even leaning more short today.
I was going to say, would you be initiating shorts on that?
Yeah, well, yesterday I switched gears. I came in long. Things felt heavy. I got a little flat, and then once we started to fail, I got short the spiders. I got short some Apple, and then I covered into the close. But then today I think that low from yesterday will be that pivot that if we start to break below, traders will lean on that, especially if we have no support from any of the key sectors out there.
Right. So let's check in with the sectors to see what we're actually going to be looking at. What was one of the strongest yesterday?
Well, we were talking about retail yesterday.
Right.
We were talking about how this could be a positive spot. Then you had Best Buy come out and disappoint, and then some other retail sales came out and disappointed. And then if you look at the RTHs, you will see that it broke this upper level. This was support we were watching to see if momentum could stay in here for an additional move. And you know what? It was taken out. So at this point, momentum left retail. It's still okay. It's still above the moving averages, but the trade changes. Now it's like, can you buy a dip if we come down to the moving average around 107.45?
Right, I was going to say, because perhaps with this sell-off, overdone, was not really justified. Because yes, retail sales for November were light, but if you break it down, electronic stores rose over 2%, internet sales jumped over 1.5%, and if you look at like an Amazon, that's now a momentum loser. But considering these retail sales, that might be overdone.
Well, I think there's just so many things piling up now, and if you've tried to have like a positive thesis, which I've tried to, we're like losing soldiers every single day. We lost the semis when Intel pre-announced with Texan. I feel like retail now is a little iffy. The banks had a rally, and now they're coming off, and they can't sustain some of these upper levels. So it's hard for us to hang our hat on something as far as for momentum trading to year end. So now we have to look to see what supports can hold.
All right. So then, what would be a good maybe sector you'd look to short then?
I think at this point, people might look at retail. People might continue on the banks. We talked about the banks yesterday. Watch Goldman. If you look at Goldman, I'll tell you right now, it broke this ascending channel. We were talking about this 5-day support. It broke below. That gave you clues that we could have some weakness, and we even broke 95.50. So I think people will watch the low on Goldman today, which is, from yesterday, 92.35, as a new pivot.
And then talk about a momentum leader that's now losing steam. We got to look at Apple here. Are we looking at 360 again rather than 400, would you say?
Well, you don't want to see Apple look like Amazon, because Amazon's been broken, and finally Amazon had momentum to the downside. So look at the chart of Apple right here. You will see that it's at a crucial spot. You had a bull flag. If it starts breaking below this area of just say 387, you could see it move back down to 380. And if it doesn't hold this trend line, we're talking 200-day all over again, and that'll be more weakness in momentum stocks.
All right, we're going to talk about more momentum stocks losing some juice, as well as some other sectors you definitely want to key into along with gold. So check out the entire morning call on The Street.